So, you've heard that an ounce of prevention is worth a pound of cure, right? But what happens when you're in the thick of it and need the cure right now? Today on the Tax Answers Advisor with Marcelino Dodge, we are bridging that gap. We're talking about how to stop looking over your shoulder for the IRS and start looking forward to grow your business. Whether you need to fix a past mess or build a cleaner future, this episode is about how intentional planning can help you sleep better at night. If you are listening to this conversation about clean systems and realizing yours are anything but, don't panic. If you have unfiled tax returns or an IRS letter sitting unopened on your desk, ignoring it is the most expensive thing you can do. As an enrolled agent, I can step in and handle the IRS for you. You don't have to do this alone. Go to taxreliefcall.com right now to book a time with me. Let's get you compliant and help you get your life back. Today, we have a very special guest on our program. It's Miss Laura Zarate, a CPA, and we're going to invite you, Laura, to please just introduce yourself and tell us a little bit about your background.
Yeah, of course. Marcelino, thank you so much. It's an honor to be here. My name is Laura Zarate, and I am the principal CPA of Athena CPAs and Advisors. We're a boutique-style CPA firm, and we help overwhelmed small business owners manage messy finances so they can grow their business with more confidence, increase their take-home pay, and also have time with their family, friends, and actually have a life. Thank you so much.
Yes, have a life. And that's certainly what we want people to do in their business. Instead of letting the business own them, let's let them own the business. We've had some conversations, and in those conversations, you've talked very nicely about how, well, tax relief has its place, but the real impact is with a proactive approach, which is the way and the direction you really like to take, and which is what I actually encourage ones to do as well. So can you go ahead and break down the difference between the mindset between a business owner who merely reacts at tax season versus one who is actively planning for it?
Of course. So the reactive versus proactive mindset is something that a lot of people need to get right when they are talking about not only taxes, but money. Just overall, just having money or trying to make money and not having a W-2. It's so important. So reactive owners take or treat taxes like a complete surprise, something that kind of happens to them at the beginning of each year or ending of each year, right? And then proactive owners treat taxes more of a system that they can sort of design, right? So instead of thinking something like, what do I owe? What do I owe? Or how much is going to be my liability? Oh my God, the IRS is going to come after me, which is something that I hear sometimes. Proactive people are like, how can I make decisions today so I can reduce what I owe tomorrow? So they treat it more of not only like a design, but more of like a project that you have someone in partnership with, right?
Yeah, partnership. That's good, being proactive there, because I've seen the end result so many times of people who aren't proactive, or even we can say procrastinators. And then you're having to clean it up.
Yeah. And sometimes a lot of people are, if, the ostrich effect, if you put your head in the sand, it doesn't exist. And that's not true, especially with taxes. They might not send you letters, but they are accruing interest and penalties. So,
yeah. So, I don't think just because you haven't filed or whatever, those things aren't accumulating. They are accumulating. They're just kind of virtually accumulating, but they are accumulating there. So now in our discussions, you have a core pillar, and I talked about it in my opening about having clean systems. So for a business owner who listens, who's perhaps managing their own books and even doing it what would be called now an old-fashioned way, loose spreadsheets or shoebox receipts there, what is a clean system? What does that look like? And when you have that, why is it a nice first line of defense?
Well, a clean system is something that records constantly and maybe like concurrently what is happening in your business. Accounting is a language for business. It tells you exactly what happened when. So a clean system includes just knowing when things happened and not guessing. I really like it when systems, well, I mean, if you do the spreadsheet kind, that's great. But it would be great if a system had reconciliation. So you know that it agrees to your bank statement and it knows exactly what's going out and in. A clean system also entitles things like separating business and personal finances that for some reason people just struggle to do. And I keep repeating over and over again. So fortunately, so consistent categorization that tells your financial story per se to the IRS. If something was to happen, you have the backup. And then you did mention like receipts and all of that. They're super important. I recommend personally, and I'm sure you do too, to take pictures and keep them like in digital copies because they tend to erase after like 3 months. I don't know about you, but they just kind of like disappear once you take them out. So yeah, I don't know. They hit the sun and something happens to them. But yeah, so that would be just have a spreadsheet, maybe something like QuickBooks would be a nice investment if that's the next step. And then also have some kind of documentation in order for if the IRS is going to ask questions, you can provide the documentation that they need.
Oh yeah, documentation is so important, and I really appreciated you mentioning about the separation of personal and business expenses. That's a challenge as tax professionals that we have in the sense that people start a business and they just do everything through perhaps their personal bank account to begin with. And then you got to stress them. You got to have a separate account. You really got to separate those things because the business is not your personal bank account.
Yeah. And I think it's important to understand that if everything, if it's the issue would be, and I'm sure you more than know this, in a court of law, they can invalidate or tell you that the LLC was not an actual entity. And that's where the issue is. So that's the real risk.
Yeah, it's a huge risk. Then, of course, the receipts, as you mentioned very nicely, taking a picture of them, scanning them, whatever method that you use to maintain those receipts is just vital, important because you just can't rely upon the bank statement. That's a starting point, but the IRS is going to want to go beyond that if something does happen and they want to look at your business a little bit closer there. And once again, that's part of that prevention because when we have to go back and reconstruct, like I have to do, it's almost like you're rolling dice.
And I'm thinking you're hoping like, dear God, please make sure, hoping that they have something digitally or they have a receipt on an email or something. It just goes insane.
Yeah, it really does there. And see, when they have those things, it leads into our next stop here about how that helps a business owner to sleep at night. So is there a specific anxiety that you have found that keeps entrepreneurs, those thinking about taxes at night, and how does planning cure that anxiety, would you say?
Yeah. So the anxiety that I see the most, and I'm sure you see the most, is unexpected tax bills or uncertainty of what's going to happen. I think in all areas of our life, not only taxes, we get a little bit rattled about not knowing what's going to happen and not knowing whether we're doing it right or wrong. So I think that just worry creates you're just using your energy the wrong way instead of actually focusing on things like growing your business. You're constantly worrying about, oh my God, I'm going to get in trouble with the IRS. So what cures or what replaces that fear is actually having some strategic planning where you have predictability, you know what's coming, so you know the timing, and you have options, which is your specialty, right? So like, where are we, what's going on, and then how to move forward. So
Yes.
when
I was going to say, yes, as we try to move forward there, that anxiety people walk into, or I get that phone call and they're just about this tax bill, what's going on, what happened, I thought I filed, and it turns out they didn't file. Or in the case of someone I met yesterday, they were relying upon one spouse to get everything done, and it turns out that, and then to compound it, sometimes you have a spouse pass away during this time, and the other spouse had everything, and we don't have copies of tax returns, and we're not sure what's been done. So now we're having to go back and try to reconstruct and get tax documents. And certainly In the case I'm thinking of, it doesn't include a business, but still you have the same anxiety. You get this letter saying there's something missing from your tax return, which for business owners can be an issue real big time, especially if they fail to include some income on their tax return. And that's anxiety. And then they're like, oh, wait a minute. They're sitting there thinking, and then they come in, we got to work on relieving that anxiety, giving them the options and saying, okay, this is how we fix it. But once again, as we're talking about here, how can we then prevent it in the first place?
Yeah. I mean, with systems, with good old fashioned, very boring accounting. That's really the answer. Like it's funny because a lot of people are like, oh, the new shiny thing. And it's like, no, you just keep doing the same stuff. And I think a lot of people just want the shiny thing. So.
Oh, the nice shiny thing. I like how you brought that up very nicely, which leads us to, we both do deal in the tax preparation, but there's a big difference because tax preparation, as you mentioned in some point already, it's recording history. It's recording what already happened. It's like taking a look back is basically what it is. Because right now we're in 2026, preparing the 2025 tax returns here. And then there's the tax planning, which is, as you mentioned, also writing the future there. So now we can plan for 2026, which if anybody's really paying attention to what's happened in the last 6 months tax-wise, there should be some planning going on. There's some great opportunities out there. How do we turn around and explain that distinction to clients who think, well, my tax work is all done now. I filed the tax return. How do we get that? How do you find it effective to explain that difference to them?
Generally, kind of like worded as different engagements, right? Mm-hmm. It's like you are buying milk and you need orange juice in a supermarket. Like they're completely different products. Mm-hmm. So tax preparation is things that already happen and tax planning is what will happen. So what I approach them is if I think they're a good candidate for a specific tax strategies, or if I think, they're paying too much tax and they just came to me last minute to do their return, I approach them with, hi, after we're done with the return and after we're done with the busy season, I come in and say, hey, I think you'll be a great candidate, but I think that is something that everyone should be looking to do. Tax planning is something that everyone, big or little, but everyone should start thinking about, right? So filing a return is just a compliance requirement. It's not a strategy. And then you have different planning tools that you can use, like timing, structure, intent, that you can definitely plan things out and really see how much the savings is. I recently had a client who was selling their business and they were thinking of receiving the whole amount either once, like a whole $2 million once, or just, it's a simple example where they were thinking about either doing it once or over 5 years. And obviously there is different tax advantages of doing it over 5 years. So, but they really didn't know. And that's one of the easy examples where you're like, that's a timing issue that you can, and then we can kind of pair higher income years with different stratas.
Mm-hmm. Yeah. See, that's where, once again, looking ahead, you can perhaps move or just make strategic moves. Income is perhaps part income, like you said, through taking the payments over years instead of paying all the tax at once. Could be advantages to taking it over years. In some cases, people get income in, but they kind of split it between you because it's at the end of a year. They can get it split. Give me payment in December, then wait to make payment in January, as far as on the income side. On the other side, the person paying it, they may want to pay it all in December. So it's a real careful balance there in trying to do that. But when they're our client, we try to have them delay the income as much as possible where it works. It may not always be a good plan, but sometimes it's a good plan. So split it between the years there. But oftentimes we have clients who come in and guess what? Everything's already gone wrong. Yeah. And so do you have an example when there's a lack of intentional decision making, how that costs the business owner money that they otherwise could have kept?
Oh, I mean, the simple one is like missing the S Corp election due date or missing the S Corp election at all or not knowing what that is, taking distributions instead of and not planning for payroll, buying assets at the wrong time for the wrong reasons. Like you don't need a Rolls Royce if you already had a car last year.
Yeah.
That's one of the things that I say the most. I'm good. Like buy a car is something that you need, but don't buy it just because you want the tax deduction, because what ends up happening is that you're buying something for 50 or 100,000 and then you're saving what, 20, 30% of that. So that's not really a tax plan and like a strategy at all.
Yeah, I agree with you totally on that. I was like, why go spend money? I mean, because the return is not, I mean, as far as what you pay in tax and your return, sometimes you're better off paying the tax and instead of having an asset that you may not have actually needed.
Yeah. And you're paying the full price. I see like tax, not to be bad, to a lot of like tax professionals recommending that. And I'm like, that is not a tax strategy. So
yeah, so you just got to be, that's where the planning comes in and working at it through the year, not just waiting toward the end of the year, because some people like to wait till the end of the year because they want to know how much money they have and everything, and then try to figure out, no, but really it should be something that we do throughout the year. If you need the large purchase, well, that's great if you really need it for your business. But if you don't really need it for your business and you're spending $50,000 to save 10 or 11,000, that just doesn't make sense in taxes. It really doesn't.
Yeah. Yeah.
So that's where the planning comes in instead of trying to figure out last minute what we're going to do.
Yeah. The other one that I've seen that I want to mention, like I've seen a couple like people that have S corps and then their payroll, it's creating a loss for the business. And I'm like, this does not make sense. But they just don't look at the payroll at all. Mm-hmm. And then they're like, I can't pay payroll. And I'm like, well, you know, it's a whole like, where is your net income? And then we can look at a payroll level, and that's where we come in.
Yeah, exactly. And see, that's where making sure their payroll, especially for the owners of the S corporation, make sure that's reasonable and that's in there. I see a lot on social media. I don't know what's going on with these guys. I never look at the information, but some of these guys talk about advantages of S corps, and I'm just scared of what they're talking about because I don't know if they're what they're talking about, because it could be they could be advocating not taking payroll. I don't know. But I know that's a strategy that some have said.
They don't mention, they don't even mention sometimes. They don't mention anything about the payroll at all. And I'm like, you need to start talking to people about the disadvantages and not make it like the next shiny object and be like, blah, 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 blah. And then they come to somebody that, you know, like you and I, we're like, where's the payroll? You need to restart taking payroll now. So yeah.
Yeah. So anyway, I've lost clients. That's one of the things I've lost people over is the fact in S corps in particular, because I said, no, you got to be on payroll. And they had only been doing distributions. And it's like, well, that's between you and the IRS, because I'm not, if you don't do it this way, I'm not working with you. And so anyway, they also, and that's fine, because I do know that some people, that's what the IRS flags. If you have an S corp and you're not taking payroll, you're like throwing up a big red flag saying, audit me, audit me, audit me. Anyway, that's a whole nother discussion, but that is an issue if you are an S corp and you're not taking payroll as an owner or shareholder in there. Well, when you're actively working in it, that is the distinction. If you're actively working in it, if you're not actively working in it, well, that's a little bit different. But anyway, in my area, of course, and as we mentioned, I work a lot in the tax resolution field, fixing the mess after it happens. If there is somebody in a mess, is it possible to start taking these proactive strategies while we fix the past tax mistakes, or do we just need to clean them up first?
Yeah. So you can start doing proactive stuff while you're fixing the mess, because what happens is that cleaning up the past is not guarantee you that you're going to change the systems in the future. So you need to make sure that if you catch the mess from now, let's say 2026 going forward, you have good systems. So resolution kind of stabilizes kind of the ground, let's say, but then planning builds for the future. So we're in Florida. There's not sinkholes in the ground, and you have solid ground for you to build.
Okay. Yeah. So basically, coming in as a tax resolution, I can help get that foundation built. But yet, while at the same time, as we're building the foundation, this is actually interesting. You can build the foundation and the house essentially at the same time here.
Correct. Yeah. And honestly, you want to make sure that, let's use the analogy for the roof. You want to make sure that there's no more leaks in the roof while you fix the leak that you have, right? So that I think might be better analogy than my initial analogy, because there could be multiple leaks.
Yeah, and that's exactly it. So we build the foundation, but at the same time, we fix the past, but yet we also fix the current at the same time. That way, as we get the past resolved, which actually helps when you're dealing with the IRS or even a state revenue department. If you're starting to work and getting things right going forward, but at the same time, you're fixing the past, a lot of times they're a lot easier to work with because they realize you're making changes and good changes. That way you can take care of these compliance responsibilities there.
Yeah, and sometimes people don't know. So I think showing that you are changing and you're learning as a business owner could be something that definitely signals the right intention to the tax authorities.
This relates to another podcast I did a while ago, to the I wish I knew syndrome. And so it's just the same in this particular circumstance as well. I wish I knew. Well, guess what? We're making you know now. So we're going to get.
Yeah. So important.
Yeah. And through here, we've talked about intentional decision making. So then for you, is this meaning that a business owner should be consulting with a tax strategist before every major purchase, or are there certain trigger events when they perhaps should make that call before making the purchase?
So I'm thinking not every purchase, but some moments you absolutely do. And I can think of a couple key trigger events: hiring or adding payroll, buying vehicles that you need, please, large equipment that you definitely need, significant jumps in revenue. So important. Like a lot of people, going back to the S Corps, for example, if you are having a significant jump in revenue, we might have to adjust the payroll, for example, or not even that, like a strategic. What are you going to do with the money coming in? Things like that. Changing an entity structure, that's a big one, because whatever structure it is, you really need to not only educate yourself on the different requirements and characteristics that each entity has, basically. And then well, I already kind of mentioned equipment, but like any major investment or distribution.
Yeah. So there are some events, and depending on how you should be able to have a good relationship with your tax person to where you can make that call there. And each professional has their practices set up a little bit differently. But yeah, we certainly encourage those listening that if you are going to look at some of this, look at this seriously, you may want to get a good relationship with a tax professional who can guide you through these things and be accessible and use whatever program. Because some tax professionals use what's called relationship pricing, which basically gives you access to them without having to pay extra. So, but that's another discussion, but something you want to make sure that you may look into if you're considering some of these items as we're talking about them today. Now, we get I have a case like this, and maybe you've dealt with a company like this, where it grows from one or two owners to a larger entity. Thus, the tax complexity increases. So a company scales. So you have a company that goes from $100,000 a year in revenue up to over $1 million in revenue. How do the rules adjust in those situations?
So yeah, a lot of the rules change. So over 100,000, you're really focusing on cash flow clarity and making sure that a lot of like the clean systems that we emphasize as a foundation of growth. And then you're trying to focus on simple habits and simple systems that kind of lay that. And then 500 to $1 million, you're really thinking about entity optimization. What kind of entity, depending on how much cash you want to, like, do you want to go ahead and have multiple owners? Like you said, like one or two owners, and then you start raising capital. That's a conversation that we need to have. Payroll strategies matter. Where is the payroll? How much payroll are you taking? And then the credits related to retirement accounts start counting. Timing of income, for example, and expenses become strategic. Just overall, the stakes become higher because it's more complex.
Yeah, you got some other credits that perhaps can kick in as well as part of that planning process. Be able to, and once again, work with your tax and accounting professional to help you to work through those. And simply stated, don't try to do it on your own.
Yeah, and a lot of people also in this stage, because I had a couple clients who started with me and then are at this stage, they just require, their accounting becomes just more complex. Like if they have either like different stockholders or they have different investors, it just becomes that much complex that you have to keep track of not only the loans, but like who owns what, where is, like, who are you giving money to? It just becomes a little bit harder. Not harder, but it's just more work. Somebody that has accounting knowledge needs to look at that. It's not just a basic APAR.
Yeah, definitely there. Now, as we look at this, business owners grow or they start small, but yet even when they have a certain amount of cash flow or a certain amount of revenue, they still hesitate to pay for an advisory service because the way they look at it, it's just an extra expense. So then how do we come in with strategic planning that actually helps so that they view it more as an investment that helps them to keep more of what they earn? And then by doing so, it actually covers the cost of this planning service there.
So a lot of clients or kind of already know that they need help. A lot of people just come in and say, oh my God, I don't know what I'm doing. So there's a part of what we do that is the whole dealing with uncertainty that honestly is priceless. So that is. But another, like if they're not at that stage, 500 to a million, or even I have a couple that are like 1 to 12 million, you really need to show them the math. I recently did this. I have a client who is opening another entity and he did not understand the difference between one entity and the other. And I actually put it in a little spreadsheet and be like, here's the numbers. He was already like a client of mine, and we were just discussing like the strategic planning sessions that I definitely encourage. But that's one of the things that just do the math and see how much you're going to do. And then the planning, you can identify tax savings and cash flow, and also like avoid your penalties and inefficiencies.
Yeah, penalties.
So the cost, yeah. And then our cost can be recovered from like reducing tax liability, reducing penalties, which could be crazy. And then also like I've seen a couple ones that are like smart compensation structures.
Yeah. And then too, I like throwing it into this about the fact that how much time does it save them in going out and making money in whatever it is that they do? They don't do what we do. So if you're a business owner out there and you can go out and make, instead of spending 10 hours or more a month on dealing with this accounting and payroll stuff, how much
and not being able to sleep at night.
And not being able to sleep at night. Exactly. That's important. How much can you go out and make in that 10 hours in what you do? Or even say, how much can you go out and make in 5 hours of what you do there? What can you make? $1,000 an hour? I don't know, it varies from profession to profession, but some can do pretty good. Whatever you go out and make in that time should more than make up whatever you're investing in a professional like us to be able to help you to then sleep at night. Maybe you get an extra 5 hours of sleep. Maybe you get an extra 5 hours of recreation. Who knows? But see, that's where the investment comes in of how valuable is your time as a business owner? And that's something that we like to encourage.
Yeah. And also like be with their family. Like I have a little kid and his hours with me are sacred. So anything that I can, even like as a tax professional, anything I can outsource as far as like looking at legal stuff, I'm like, here, lawyer, help me. Or looking at different things that are not my bread and butter, marketing. No. Here we go. Bye-bye. Anything that obviously like I could do, but my time with my son is sacred and my family is sacred. So I'm like, no, I'm just going to focus on what I do best. And then the rest I can either figure it out what to do, outsource, I'll figure it out.
Yeah, because even as professionals in what we do, there's things that we outsource. And one of them is just particularly legal matters that we have to watch out for, and then other things. And some of it is, I know in my system, stuff that we outsource, that we pay for, I pay for myself, and maybe you do the same, is to have a third party monitor your computer systems, make sure they're secure.
Yeah.
I mean, I'm not a computer security expert by any means, but yet that's something that if you are looking for someone to assist you, that's something you should ask them, really. Not move it off topic here, but that is very important.
Yeah.
As far as you're looking, I mean, I spend a lot of money each month just making sure I have secure computers, antivirus, firewall, all that stuff, because I don't know it. And so I pay somebody, just like as we're talking about here, you would want to pay somebody to help you keep your numbers so then you can sleep at night. I mean, I sleep better at night just simply because I know I got secure computers.
Yeah.
So
we're taking all legal, like this is why we invest on professionals. We just happen to be some of it.
Yeah, we're just in that category. We're just a different category, but we help a business owner of whatever size to understand their numbers and to be able to sleep at night and to relieve their anxiety. So now, as we come here, one last thought here, that someone listening here realizes that right now, boy, I've been listening to this. This all sounds great, but guess what? I've been completely reactive. All I've ever done is think about my taxes in April. What would you say is an actionable step one can take, even right now, to start shifting to being proactive in this?
Ooh, I would have them schedule like a tax planning conversation. I wouldn't really make it so that it affects your 2025 taxes, but like, how can we start planning for 2026? And also, like, within that realm, the first thing a tax planning professional is going to ask you is like, what is your income projections for the year? What are we talking about? Estimated tax payments, and then decisions that you want to make within like the next 6 to 12 months. So those would be the stuff that you would talk in that tax planning projection, and not make it so that it's once. Make it so that it's every 3 to 6 months, have a check-in. I don't know how it works, but we, in our firm, we have like a plan where we meet with our clients every 4 to 6 months. So we understand, we know exactly what's happening. And also, like, by then, tax planning becomes easy because I know what's happening in your business. And then tax prep becomes a breeze because I know exactly what's happening. I know what's going on with your books. Where is all your planning conversations?
Yeah. So once again, if you are thinking about this, the options for 2025 are limited because we're obviously in 2026, but there's a few things that can be done for 2025, still kind of looking in the rear view mirror, but they are very limited of what you can do, but there are a few things. But then you can start looking now toward 2026 and even beyond, and just making those adjustments, because with the big, beautiful bill that was passed, there's some good stuff in there. And as I've gone through classes, I've been like, wow, this is great for the average taxpayer, small business owner. There's several things in there. You need to get with a professional, be it with myself or Laura or whoever. You need to be with someone who can help you to go through these things, to start planning out the year and looking what advantages you can get there. So any final thoughts there today, Laura?
I think as far as that last question, you don't need like perfection. I would say you just need like a starting point. And then, just a starting point, and make it so that it's consistent. It's not a one-time a year thing. It's consistent in all kinds of matters, because you're not a business. A lot of people are like, no, but when I used to work, you're a business owner now. And as a business owner, we have to adjust to being a business owner. And this is just part of being a business owner.
Yeah, definitely. We really appreciate that. That's some wonderful insights. They really appreciate your input there, Laura. So if someone would like to reach out to you there, Laura, how can they do so?
Yeah, so we have a webpage. It's Athena, like the goddess, and then CPAs.com. There in the contact us, you can fill out the questionnaire, and then you will be directed to having a call with us or with me specifically. And then we also have an Instagram with the same handle, Athena CPAs. And then a LinkedIn. I think you can find me on LinkedIn under my last name. I am the only one. I promise I looked. So I looked all over. But yeah, so that would be it. And thank you so much.
Okay, thank you, Laura. Once again, it's been such a wonderful conversation. Being proactive in your business is so important, but especially in the tax. So what we want to really look forward to is just continued discussions, encouraging business owners. There's incredible insight, strategic planning. You need to get the assistance. And then we want you to remember, whether you're trying to resolve a tax debt or just trying to keep more of what you earn, the secret there is taking action. Don't let fear paralyze you. Remember, the tax code is complex, but your strategy doesn't have to be. It's never too late to implement a clean system that's been talked about today. If today's episode has sparked a realization or made the light come on that you need help now, reach out. As a certified tax representation consultant, I am licensed to represent you before the IRS. You do not have to fight the government by yourself. You can visit taxreliefcall.com today and stop letting the IRS dictate your future. Take control of your finances and get the peace of mind that you deserve. Thank you so much for listening to the Tax Answers Advisor.